What's up, YouTube? It's your boy Lou. So we're gonna get right into it. So this is the German British pound versus the JPY, the Japanese yen, and this is on a daily time frame. So I took a sell on this trade 3 days ago, or this whole week, right? I took a sell, and I just wanted to break it down to you guys so you guys can probably take some tips and tricks away from the trade and just understand how I was looking at the market. So without further ado, let's get right into it. So as you can tell, looking at the market for the past pretty much year, because this is down in September, this is March. Pretty much the past year has been pretty much bullish, right? We're making higher highs on the daily. So if you were taking buys along this market condition, you probably would have been gaining profits. But anyways, let's look at recent data, right? So let's just go ahead and start with market structure first, because that's what you always want to start with. You don't want to just go in here and start marking off something or just seeing whatever you see and just start plotting things, right? You always want to look at market structure first. So let's start with market structure on the daily. So you can tell we've pretty much been bullish, all that. So let's just start with this high and this low right here. So we got our high, we got our low. Now we got a higher high because price broke the previous high right here to make a new higher high, right? So now we're bullish. And then price came down here to make a higher low, right? And then broke this higher high to make a higher high. So looking at it now, this is the previous high, then we broke it to make this high. Then we broke this high to make this new high. So we're going up. So the highs, we're going to make higher highs. And then the lows, this low, we made this new higher low. And then now we're coming down here to make this higher low. So look at the market structure. It's high, low, higher low, higher high, higher low, and then price broke this structure to make what? A new higher high right here. So as you can tell, pretty much price is just bullish, right? So we're not looking for sells in this market structure. We're looking for buys. So this is the So this is the previous higher low, right? So previous higher low. So in order for market to be bullish, we cannot break this, right? Because if we break this, then all this bullish market structure is invalidated because it's the previous higher low. And in order to keep making higher highs, higher lows, we have to break this high. So price had to break that, come back down to test to make a higher low, and then break this again. And then this would be the higher low, right? But we didn't do that here. Price didn't break this higher high. Instead, it broke the higher low, the previous higher low. So now that we broke the previous higher low, all this bullish action, all this market condition right here is now invalidated, right? We don't need it anymore because we're not bullish anymore. We're bearish. Well, we're not bearish, but we're just not bullish anymore, right? Because we broke this previous higher low. So right here, we're good, right? Because higher high, higher low, higher high, higher low, higher high, and then we're just in this range. So we're looking good. And now we broke this higher low. So now all this is pretty much invalidated. We don't need none of this anymore, right? So now we're looking at new structure. So now let's get to new structure. So as I said, this is the previous higher low right here. The market broke it, right? So all this is invalidated now. And now we're just waiting for new structure to build. So now we're looking at here. So now this is a high. Copy this. Now this is a low. And then price came up here to make a lower high, right? Because these are still highs, right? High, high, high. All these are highs because they're at the top. High, high, high. These are lows because they're at the bottom, right? Low. And once price breaks this low, it's going to make a new lower low. So anyways, this is a high, low, lower high. Now we're lower low, right? Because price broke the previous lower low, broke it to make a new lower low. So now that's the new lower low, and then we're coming up here to make a lower high. So as you can tell, we're still dropping, right? Lower high, lower high, lower high. So now we got to break this lower low to be in a more bearish phase, right? So if we break there, we're just going to be in a lower low, and then we're going to wait for a lower high to sell right here and then to make a new lower low, right? So that's just the market phases. That's just market structure. I just wanted to show you that before I started breaking down the trade, so you don't think I'm just coming into a random chart and just start plotting things up. Now you got to actually look at the charts, understand it, and then start plotting your analysis. So now that we know we're in a bearish market structure because it's forming lower lows, lower highs, lower lows, and lower highs, now we know we're bearish. So now we can start looking for sells, right? Because we're in a bearish market. So let me just take everything off. Let's start plotting the chart. So let's just add our levels. So we can have this resistance level right here because it hit the top. It fell, right? So that's the resistance. We can mark these supports because it hit, will bounce, hit, bounced. So that's a good level right there. We can also have this level. As you can tell, hit its resistance, fell, price broke out, but then came back in. Here's resistance, resistance all throughout here. And this is on the daily, so this is every candle is worth 1 day, 24 hours. So this is 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day. So price couldn't break this resistance that you see right here for 6 to 7 days, right? So this is a strong level. This is where price is reacting good at. Then it came back, hit a support, kind of broke through, now it's playing around. But anyways, these are the levels, and then also a level right here. Resistance, support, 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 resistance. So these are just the levels that I had on my chart, right? Now let's zone them out so they look better. So now we have our zones. Now let's tune them up a little more with our psychological levels. So now we got our levels. Now we got everything we needed plotted. So now we have our levels in there. So now let's start adding our trend lines. So let's go to the daily, zoom it out. You can tell we have a trend line. Plot this point, 1, 2. So we have that trend line. We could have this point to this point. We could have this point. This actually wouldn't need that. So these look good for now. So we just have these two trend lines, right? To just show that price is bullish here. And then this trend line just shows that price broke out. So as you can tell, we identified market structure, price is bullish, then it broke out. So as you can tell in the trend line too, see how it bounced here, went up, hit this, went up again, and then didn't hit this and go up, and it broke through. So that also broke the market structure and the trend line. So that's just two things that you can identify as price being bearish here. Once it breaks the trend line and once it breaks market structure, it starts forming lower lows, lower highs. So we have those two trend lines, and we're just going to add this trend line right here. 1, 2. So I plotted this point to this point. So on the daily, actually we can put our other support. Never mind. So on the daily, this is what price looks like, right? Fully marked off. This is what I'm looking at. So actually, definitely forgot to take it back. So let me take it back here. So this is just 2 points, not 3 points, right? So we connected this point. So 1 touch and 2 touch, right? So we have 1 touch, 2 touch. So now we have, so like I said, we have market structure agreeing with us, right? Because we're making high, low, lower, high, lower, low. Now we're just looking for a lower high to get in, take a sell, right? Because we're going with the trend. You don't want to be going, you don't want to be looking for buys right here, right? Because then you want to be going with the trend. And the trend is basically everybody in big investors, right? You want to be going with them because our little $100 accounts, $10,000 accounts, $100,000 accounts, even $1 million accounts. They're nothing compared to the big investors that have billions and billions flowing into the market, right? So we want to go with them. We want to jump in the water with the trend, right? You wouldn't want to go against the current in a river because you'll just drown, right? So you don't want to drown. You want to be able to survive. So we're going with the trend, right? With everybody else, with the big investors. So we have one touch here, two touch here, and I was just waiting for a third touch around this area, right? Because it's this trend line, so that would act as resistance, as well as this support, old support turn into resistance, right? Because we hit it, support, support, kind of played around, and then support, resistance, and I was waiting for another resistance touch right here, right? So just on this daily level that you can tell is acting as support and resistance. So I was waiting for old support to turn to resistance here. I was waiting for, so that's one confluence. I was waiting for a third touch here, so that's two confluences, and I also have a fib drawn up from this swing high to this swing low, and it was around the 78.6 level, right? So I was looking for a trade around here, looking to be something like this, stop over this previous high or low, over the 100, and then target down here. So something like this, right? And we could probably even extend our targets here. So something like this, right? And it's always going to be different once price action comes up here and does its thing, because it can come up here and have a little stop out and then come back here. So obviously our stop loss wouldn't be there. We probably wouldn't get in here either. We would probably get in somewhere like here, or stop loss up here, whatever, right? So I don't know. So for right now, when the trade was right here, this is what I was looking at. This is just something that looked good to me. Just come up here, price reject here nicely, probably do something, and then come up here and start pushing down. And I'll have my stop loss up here. This is just what the trend looked like, right? But let's see what actually happened when price came back up to the level. So this is where our level is at. This is everything I'm waiting for. So now we're just waiting for price to come to the level, right? So let's see what happens. So price comes to the level, it falls. It falls more. So I'm like, damn, I missed the whole trade, right? Because I wouldn't want to enter the trade if it's already pushing down here, and I'll have my stop way up here, and then my first target would be right here. That'll only be like a 1 to 3.5, 1 to 3.9, right? So that wouldn't be a good risk to reward, because you always want to have a tie stop with a longer reward, right? Because in the long run, this will be better. 5.23 would be better out of 10 trades if you win 5 and lose 5, or win 5 trades with this and lose 5 trades. You would be at break even, right? Because you would win 5, have 5%, and then lose 5%. So you would be at nothing. But if you had a better risk to reward, you'll make more money in the long run, right? Even with losses, because losses are kind of unpreventable, right? It's gonna happen. So if you have a good risk to reward, then you'll be good in the long run. Obviously, with a good system. But price came there, hit, and it started falling, right? So I was like, all right, I don't want to miss this whole trade, and I'm not going to get in here, so I'm going to look for a pullback or something and try to find another spot to get in. So I had this counter trend line marked up from here to here, just to show more bearish action, right? So if we're on the daily, we're looking, like I said, market structures agree with us, and everything's looking good. So we wouldn't want to get into the trade on the hourly right here if price is making, on the lower time frame, price is making higher highs and higher lows, higher highs, higher lows, right? Because this is a bullish market. And you want everything to align with you. You want the daily to be going down, like it is here. You want the 6 hour to be going down, like it is here. 4 hour, 2 hour. You just want everything to be aligning with you, right? So if the 1 hour is still going up, like it is here, you wouldn't want to be looking for a sell, right? So you want to wait for bearish action to come into the market. So we can see that we hit this trend line, third touch, right here. Because remember, first touch, second touch, third touch. Nice reaction off there. It started pushing down. So So now I started pushing down. I was waiting for a pullback to get into the trade because I didn't want to miss a trade. And like I said, I didn't want to get in here and have price. Just wanted to have a good risk to reward, right? So after price broke out of this and it started pushing down, this is when I identified a head and shoulder patterns I could play out. Because as you can see, let me just take, actually no, I'm not gonna take everything off. But as you can see from here, price is making a left shoulder, a head, and then we could be making a right shoulder along right here somewhere, right? So I just identified this because after it broke out of this counter trend line, I was saying, okay, it broke out of that, this is low, this is high, and then just a head and shoulder pattern was looking like it was going to form, right? So this is what I seen. And this is pretty much what I was waiting for, right? Just for price to come back up here and to reject off this trend line or off somewhere and then to get to look into the trade, right? So once price started pushing up, I was like, okay, let me take this off. Let me draw a fib. So I drew a fib from this high to this low. And I was waiting for price to come up here, right? Because like I said, the head and shoulders pattern, well, I didn't say this, but if you know your patterns, and this is something that I've been implementing in my trading, and I'm going to be implementing it longer in the future because this is just more confluence. So patterns just help add a little bit more confluence. So I just seen that this was the left shoulder, this is the head, and I wanted to see a right shoulder. So in the head and shoulders pattern, this is where you want to look to take the sell, or if it's flipped, this is where you want to take the buy, right? Off the left shoulder, resistance. So that's the left shoulder, head, and then this would be the right shoulder, right? Mirroring the left shoulder right here. Because if it broke this and then broke this head, then it just wouldn't be the head and shoulders pattern, right? So I was just looking for a rejection in this level to get into the trade around here, have my take profit up here somewhere, and then have my stop loss down here, like I said. So this is what I was looking at and I was waiting for. So I identified that, and now I was waiting for a price to come up to the level again. So now let's see what happens. So let's take it back. So as you can tell, price came back into the level, right? And it also rejected nicely off this 78.6. You can see the zone right here, right? So after I seen these two rejections on the hourly, and I seen these two tweezer tops on the 2 hourly, and then the 4 hour had this wick, and then just the 6 hour day looked like it could continue down from there. That's when I was like, okay, this might be a good entry to hop into the trade right here. So this is when I hopped into the trade, right around here somewhere. I have my stop loss above the 100 and above the zone, so like somewhere right here. So go to 4 hour. And I have my take profit all the way down here, right? So this is what the trade looked like. Go into it. This is what the trade looked like when I got into it. Exactly like this. Horizontal level. So this is what I was looking at, and this is what I was seeing. And once I got into the trade, this is what it looked like. But then I identified that. So my two targets were at this level right here. That was my first target. Oh, I don't have it on there. This level. So these are my two targets. I was waiting for price to come here. I was going to take partial profits, and I was going to take more, or I was going to close the whole thing right here. But then I identified that price could come here and bounce, and then go up and stop me out, or go up and do something, right? So I wanted to take partial profits here just in case that happened too. So like I said, once I got into the trade, actually I had this is my first target. So this is target 1. It's going to take partial profits there. This is target 2. It's going to take more partial profits there, and then this is take profit 3, and I was going to close the whole position right here, right? So let's look what happened once I got into the trade. So price pushed down. automatically, slap my first take profit on the back. So I took profits out right there, and once it hit that, I also pulled my stop loss to reduce risk a little bit. And I just put it over the head right there, right? So hit first targets, move my stop loss a little bit down, and let's see what it does now. Because price could just come up from here, support, 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 and then just come back up here and just play around this level, right? So I wanted to take quarter profits just in case. So I took that, and then price consolidated here for a little bit, and then finally broke that, and then slapped my second take profit on the back. So once it did that, I moved my stop loss to the right shoulder and just put it, put it here, right above this right shoulder, just to reduce more risk, right? So instead of get taken out at like 1%, you probably get taken out like 0.34%, right? So just to reduce risk a little bit. And then, so now everything's looking good. Price is going down in my favor. And then price came down and broke this level, right? So I should have lucky took more profits here. But then again, I was waiting for this target, right? I was waiting on these Fibonacci retracements. So once it broke this level, I went break even. So I didn't have no risk on the trade. And I was just going to let it run, right? So I had that. Now I had break even to trade. And took two profits from this level. I took two partial profits from this level and this level. So everything's looking good still. And then price came up here. Then it stopped me out, and then it came back down. And then once it came back down and it retested here and it started pushing up, I just thought that price was just going to either stop me out of break even or just come back up here and play around in this level, right? So I just got around the trade. I got out around the trade around that level. So 152.548, 152.5. All right, yeah. So around this level, right? I got out right here. So I took partials here. So that was 0.5% partials, and I took the rest here. So it was like a 0.7 gain on this trade in total. And then once I closed the trade, price came down. Price came down, and I thought that it was going to just continue down from here, but I obviously wasn't going to revenge trade because I wouldn't know where to place my stop loss and all that. So I was just going to see what price was going to do after that, and then it did that, and then pretty sure buyers got in right here around these levels, and they just got all stopped out. So yeah, price is just sitting around these levels right now, and that's just the chart that I was going to show you guys on. This is the chart that actually looking at now, and I don't know, just kind of eyeball price, see what it's gonna do now. So yeah, that was the trade on JPG, or German British Pound, Japanese Yen, and that was just something that I wanted to break down to you guys to help you see what I see a little bit, just to see if you guys took anything from that. So yeah, these are just the pairs that I'm waiting for this week. Hope you guys learned some, but appreciate you for watching. Thank you.